What is up, party people? Hope you guys are all having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We're going to do what we do each and every day, identifying potential breakouts and reversals from an educational perspective. Hope you guys are all having just an absolutely killer day out there. Yesterday we did see a pretty nice reversal in the equities markets, and so the slowing momentum to the downside proved itself that, hey, we may not continue this downward move as it popped above the prior pivot high. So we're kind of back into more bullish territory, and that's what we talked about yesterday. I'm not married to a direction. If the market's going to tell me to change directions, I'm going to change directions on a proverbial dime, because that's what being a trader is all about. It's not about trying so hard to be right. But we had a pretty good day in a couple of different positions, primarily in the commodity markets, where we finally saw crude oil take a move. And unfortunately for the consumer, it was a move higher. But for the trader, it gave us a decent breakout opportunity. And some currencies actually, as much as the currencies were kind of garbage, we had a couple of moves in the currency market. So real quick announcement, probably sometime in the early first week of March or so is when we're looking at our next Trader Summit. So Trader Summit will be the first week of March. Remember that our Trader Summits are full day events, full day, totally educational. It is not a big old sales pitch. So we will have a link that you can go and register for the Trader Summit. We got to make sure that everybody that attends registers. We get everybody's information, but we're gonna look to have a couple of really good guests. I got a former CBOE floor trader who looks like he's going to join us. Looks like we've got a former CME floor trader that looks like they're going to join us as well. And I'm working on a pretty big name commentator. So we're going to talk about what are some of the things that are going on overall in the market. So hopefully it'll be a good day. I'm positive it'll be a good day. But let's go ahead and dive into today. I've got a fairly hard stop today in 15 minutes, so I've got to go fairly quickly. I have an early appointment this morning, so I want to make sure that I hit it and hit it hard. So looking at our overall markets, what we can see, and I'm just going to switch these all to a 4-hour chart, and I'm going to zoom in on them a little bit. And so the reason yesterday that I had said, listen, the market's telling me I need to be more bearish, and thus I was more bearish, was because overall, the price action that we saw told us that there were swing lows and swing highs that were each getting a bit lower. And so since those swing highs and swing lows were each a bit lower, it told me, hey, listen, you're probably better off being bearish. And that was my overall sentiment and feeling. And I was really looking at, but there wasn't a great opportunity to get short, if anybody remembers. There wasn't a lot of great supply areas to lean on. And I said, well, about the best thing you have is a potential for a candle-to-candle short right off of this level. So you did get a small entry right here if you decided to go ahead and take that, and you got a little move away. But then there was no follow-through on that. Matter of fact, it was a fairly quick stop out. Not a big position. If you move your stop down below each subsequent candle, as we talk about it, and it's not a huge loss on that trade. But we said that if the markets then come up above here, that's going to change our bias because we will have gone above the last swing high. And so by going above the last swing high, we completely change our overall trend direction. And that tells me that I want to be more of a buyer, right? So when I think about it like that, what I'm doing is I'm utilizing the market's momentum to tell me what I'm better off doing is being a buyer or being a seller. Now, insofar as the ES goes today, you have a couple of levels down here that were formed, just not formed at a great time of the day. All right, this is 6 p.m. And that structurally, that's a pretty good area structurally. It's a former area of resistance, former area of support. The downside of this is that it's not formed at a great time of the day, right? You look at this, it's not a great time of the day, thus making it a bit weaker. We may get a little bounce off of this supply, but I just don't feel like that's going to happen at this point, especially with the basing we have here before the level. We would call that the kiss of death. And remember that if we're in an uptrend, that has to be a confirmation entry anyway. So if you took it on this short, you've actually made a few points on it, 6 or 7 points. And so I'm going to remove this level at this point, and I will still keep this one on here. It's not, like I said, not the best time of the day, and that's the downside to this. but it is still a valid level. Dennis, I figured the momentum shifted back to the upside Sunday evening when I seen basing on the way back up. Right. The basing on the way back up was a very big tell, Dennis. I would agree with that. The basing on the way back up was a pretty big tell, because you got to remember, whenever we see that kind of basing, so here's the way that I think about it. And kind of like with GameStop, for those of you that are still, looking at GameStop every day, when we look at GameStop on an hourly chart, what we'll see is that the big boys are going to come back and play. And when the big boys come back and play, look at how the volume was super high before the gigantic run. Then we started to see the big whipsaw moves, and our volume really, really fell off. Where the real money came in was before the gigantic move, right? The real money came in before the gigantic move. This is when people started to really get excited about the position. If you look at this on a daily chart, I mean, we're seeing our volume just fall off a cliff. And that's because eventually the big boys are going to win, right? I mean, and that's the thing to remember, is that in all markets, eventually the big boys are going to win. And I think we're seeing that whenever you see basing come back in, that tells you that the institutional investors are bringing things back more into some normalcy. And that's exactly what we want for a better, cleaner, tradable market. So when I look at my high volume nodes from yesterday, my high volume node from yesterday is this line right in here. That lines up perfectly with our 15-minute wick over wick area that we just identified. So our high volume node and that 15-minute wick over wick are almost perfectly in sync with one another, and that's actually a really strong sign. Now, when I look at the 6 o'clock level, that 6 o'clock level is not quite as clean. It's not going to be as strong of a level, and so I'm not as interested in it as I am the equity, the level down below here. The level down below there is a bit better. All right. And that's really, we're just talking about volume profile and the confluence of volume profile back into our charts. NASDAQ. So the NASDAQ position, very similar to the S&P, in that before our 1 hour supply level, we started basing here in front of the zone. And now this actually is setting up for a potential breakout above here. So, oftentimes a lot of people don't like to take a breakout above the Globex high due to the fact that there could be a trap sitting above us. And that could happen. We could have a trap above us, but nothing here that's super clean that I see as far as a Globex trap and anything that I would lean on. So nothing major up there for me to be overly concerned with from a trap perspective until I get to this region up here. So a breakout above that region, I think we've got 1 touch, 2 touch, 3 times a lady, and then boom, pop above there, provided that we get the basing. I think that actually sets up really cleanly. On a bit of a pullback, I want to throw my volume confluence on there one more time. Looking at my volume profile. Now, interestingly enough, my volume profile for yesterday on the NASDAQ was all up here near the basing area. Towards the end of the day. So that's actually my volume profile is telling me that same 6 o'clock level that's not a great level in the S&P might be a better level in the NASDAQ. And what I'm doing here is I'm utilizing the yesterday's confluence of the high volume profile combined with what is a level of demand. And so let me remove this study. And so while that's not probably normally a level we would consider and lean on, it's the same level that we found in the S&P. And so I'm going to use the volume profile as an additional odds enhancer there to give me a bit more probability, right? And so I think that when we use that tool, it kind of helps us to get a little bit clearer picture. And then the Russell, the last one I'm going to look at from the equities, the Russell today. We went above our confirmation short without even thinking about it, right? I mean, just blew right through it like a knife through butter. And so, and it does match the high volume from a couple of days ago. So I think that actually may come into our favor. Well, interestingly enough, if I leave that volume on there, or that zone on there, that might become a flip area on a reversal. Nah, you know what? I just don't really have anything super clean in the Russell. I feel like I'm trying to find something that may or may not be there. I'd say the closest is probably somewhere down in here, but I don't have anything that's amazing on here, so I'm going to remove them altogether. All right, so those are my equity levels for today. Let me back out of here and share this grid. Oops. Well, that's not what I meant to do. That's better. Let me zoom in on that so when I share the grid, y'all can see the picture. And then certainly, by the way, we based in front of this region here. The Dow is the only one, by the way, that is not put in a higher swing high. And so it's lagging behind the other markets. All right. So, questions on equity markets. Before we move off of equities, does anybody have any questions on equity markets today that we would like to discuss or talk about? All right, let me post this grid in here. All right, next, let's move over to not bonds and currencies. So my settings with volume profile, I've got two different ones. So my one is set to a chart. So this is a chart, and the one that you just saw, because that's probably what yours looks like by default, and the one that I did was the volume profile by 1 day. And when I look at the volume profile by 1 day, my settings on that are set to automatic 1.0, and then time per profile is set to day. Multiplier of 1, and then I have 1,000 profiles set. So hopefully that, and it's a much better tool when I use it that way. All right, let's move over to CL. So we talked about the fact that we're doing two things, Jack until CL gets through these levels. Well, Jack just left town. And so we got a bit of basing here in front of the level, and then boom, got a decent pop above that region. If you were in front of the markets, this actually worked out for a really nice potential breakout trade. As we did get basing here immediately before the level with a nice move away. If you were not in front of the markets, I don't believe in set it and forget it. And so maybe you had an alert set up and got you the opportunity to get in. But that trade worked out really, really well, and we've gotten a nice move off of that breakout. So since that breakout occurred, our 4-hour trend it looks basically just like a bull flag pattern, right? If you think about it on a bigger picture, this is a bit of a bull flag pattern. We've broken out of the flag, and we've got a strong 4-hour move higher. So obviously our confirmation levels are getting blown through as we would anticipate happening. 15-minute confirmation level is going to get blown through when a 4-hour trend resumes its main direction. So yesterday, where the breakout started was on this basing right in here, which is where our first area of reversal is. Now, if you look at that, that was formed at the same time of day that the S&P also had its level higher. And so we've got a demand level that was formed on the S&P and crude oil and the NASDAQ right around 6 p.m. Once again, not a great time of the day, but a good level. The level that's even better from a structural standpoint is probably this one down here. Better time of the day, former area of resistance, a little bit of a wick over wick area right in through here. Probably a little bit cleaner level and a slightly better time of day. So when I have this, I like to do confirmation as entry number 1, limit as entry number 2. Going a bit higher if I go out on a weekly chart, and I'm using a weekly chart because we got to go way back to see it. We are coming up on this area of resistance, and really this is where the market had stalled at this weekly chart's level of resistance. Our next stopping point is really back up to $60 a barrel oil, and that's that's really kind of the next major stopping point if we get through the next little area of resistance that's above us. So let me go back here. Let's see if I can go back a year. Okay, so going back 360 days on a 1-hour chart, the supply levels that we have in front of us, we do have a couple of supply levels. I mean, that's a very clean level of supply up above us. That's a base drop below a pivot high. Very clean supply level. And so I think that that's still in play. Above there, you've got, you got two of them. I actually like the lower one a bit better. You've got two levels of supply that are above us, but this one's right at a market open, which is a really good time of the day to have that level in place. So you've got two supply levels that we're approaching that are above us. Both of them are wider, if you would say, than our average candle has been lately. So these are wider levels than what we had when we created it. When we created those levels, those candles that we made were actually fairly small candles because oil was a lot more volatile. There was more volatility in oil at that time. We've seen a lot of the volatility get sucked out in oil here recently. And so that makes this level much wider relative to current candlesticks. So I think that these levels up here are still valid levels. They just have to be confirmation entries as potential shorts with our big picture trend being up. Gold, gold's still going sideways. Hasn't really given us anything. If we looked at taking the gap fill, we'd have gotten stopped out. If we looked at taking this supply level, we'd have gotten stopped out. Point being, don't fight these markets when they're not giving us clean levels. Now, I will say that the closest one I see that I like is up in here. It's just not a great time of day either. Fairly clean area, but I'm still in that sideways price action, so I want to stay away from it. Nat gas. So I talked yesterday about the Nat gas gap and go. On the gap and go, we said take your stop and move it up to here. If you are still in the trade, it is, and if you've not already done it, it is now time to take your stop and move it up to here, right? So now I've locked in some profit, and as I've locked in that profit, it's continuing to run. If we get above this swing high, if we get above 3,005, then you're going to want to take your stop and move it under here. So if we get above 3,005, take your stop and move it up all the way under here. And that's how you do a manual version of a trailing stop, which allows you to lock in profits on the way up. Gap risk for nat gas is going to be very limited, right? It's a very small gap risk during the week until the Friday, small gap risk during the week. And so by moving that stop up, you're allowing profits to continue to run. And so that's the best way to make this trade and make this play. So take your stop, move it up. As far as getting into a new trade, we are coming into supply. And the supply that we're coming into is this little area here. This is drop, base, drop. I can go back further. Look at that on the hourly chart. And looking at that on the hourly chart, we can see that it is the little wick over wick area. So we are coming into supply where I think we could see a bit of a reversal from there. But if you decide you wanted to take it, it's a confirmation. And then this is a speed candle. So we anticipate speed candles to get retraced. So this could actually be another area of demand where there's an opportunity to get long. But for at the very least right now, take your stop, move to break even. All right, let me share this one with you. Pop this in. All right, like I said, I got a hard stop today. So as I just kind of pop over, take a look at ags. Ags yesterday, we had a confirmation level that got blown through, and then a limit entry that gave us an entry, and then price moved away from there. Our 15-minute chart tells us that if you got long on this position, your limit your confirmation entry gave you no entry, but your limit entry did give you an entry, and your stop would have to be below this big candle's lowest point. So technically, 1, 2, 3, 4, 5, 6 candles later, price had really gone nowhere. So you should have moved your stop to break even. Now that trade is, and if you stayed in it, then you got a nice little run out of that position. And so now it's coming back down into that level. I don't know that I would add something new to this at this point. I'm going to hold off on that one. Wheat is actually setting up for a nice little breakdown right in here, as we saw that we've tried to poke a bit higher. I would still need a bit more basing here in front of the level for that to work. Taking a look real quick at bonds and currencies. The euro, we talked yesterday about a euro potential breakdown, and so we did get a breakdown in euro, and the euro that we got in breakdown didn't give us great basing in front of it, so you may or may not have taken it depending on your risk tolerance. It was a little far away on the basing side. But for those of you that did take it, you've gotten a little run. If you didn't take it, I really like this wick over wick as a retest trade. So coming back into here as a retest, I think, is really the next best thing on the euro. And then the Canadian dollar bounced off of our demand level. It's moved up nicely. If you're still in that Canadian dollar's position, take your stop, move it up probably underneath here. If you really want to take some money off the table, up under here, and then allow profits to run, I feel like it's going to come back down and eventually give us the breakout. But the long worked out really well yesterday for a pretty nice 3-to-1 move for those of you that jumped in on that one. Hey, do me a favor. If you haven't already done it, hit the thumbs up icon. It means a lot to the computers. I would appreciate it. Hit the like button so that people know that you're watching. The computers know that people are paying attention. And then I really don't have a whole heck of a lot in my other currency markets. The Great British Pound had a bit of an ascending triangle. It looks like we've actually started to break through the bottom of it. But remember, I'm not taking the trade on the breakout of the pattern on the ascending triangle. And we're still kind of in a holding pattern on the U.S. dollar as they're talking about the stimulus and what the next stimulus is going to be. And I think they're talking about the difference between 16 billion and 1.9 trillion. When you start talking about illions with different consonants in front, I just get lost. And so that I think is really what's causing a lot of the dollar's fluctuations to not really move all that much. And so more opportunities are still out there. Japanese yen, we could get a breakdown below here. I wouldn't be surprised to see a bit of a breakdown below there, especially since we got 1 touch, 2 touch. We're getting a little bit of basing here. So if you wanted to take a breakdown on there and allow for the kind of the next leg down, I think that's okay. Your stop would be above this pivot. That's really the one that I think makes the most sense from that perspective. New Zealand dollar, I don't think there's a whole lot to talk about or really to add to what we've been looking at. I want to take a look at the Swissy, which we looked at yesterday, as the breakdown did hit in the Swiss. So if any of you took the breakdown in the Swiss, that's more of a swing trade because it was done off the daily chart. Your first target is down in here, 1.105. I think that's a really good first target as we had a little bit of a kind of a head and shoulders pattern in here as price is still dropping from there. All right. So I apologize that I had to run really quickly here at the end. I just wanted to make sure that I at least covered the markets that had anything there. And there frankly isn't a whole lot today to review and to cover. So if you guys have any questions, certainly give me a holler. I'm going to pop off here for the day. I appreciate you all joining me on this lovely Tuesday. Until tomorrow, everybody, hope you guys have a great day, and I will see ya.